So getting first to the Tiga and Makuwa area of fours. They are sitting basically just on the edge of our basin. This gray line, if you can see that, it is basically the southern border of our block. So we are basically actually on the edge of the actual trough petroleum system. However, I want to point out that one of the important things that we're finding lately is playing the rift margins. It's not something that has not been done particularly in Chad. And playing the rift margin is also something that, for instance, very successful being done now by Tolal in Kenya. So again, we're finding ourselves, this is a little close-up of the area, we're finding ourselves on the rift margin. We're finding that based on mapping that's been done by previous operators, we're having a good series of both seal and reservoir rock developed. So one of the things that we hope to find that these both elements will give us a reason to find some potential trapping mechanism along the margin. And then if you go to a line that brings us from the discovery well Tiga, which is by the way a discovery that was given by actually about 8 million barrels, and we're moving out north towards our block, and this is basically the block boundary, you can see that we're basically on the edge of the basin. But one of the things that we need to note is that over the years, when oil generation took place, all the oil has generated continuously towards the rift margins. And there's all reason to believe that oil would have been trapped, should have been trapped along the rift margin in the structural stratigraphic traps that potentially exist on the rift margin. So having said all that, we're finding ourselves in the BDS area with two focus areas. I mentioned the focus area number 1 to due north of the Tiga and the Maku wells, and an area focus area number 2 that is located due east of where OPEC has its discovery. And again, like I want to point out, our focus for these particular areas as far as activities are concerned, in focus area 2 we'll start with an airborne gravity similar type of survey that we hope to fly in Kenya, and then follow that up with seismic, and in focus area number 1 we probably will start with seismic right away. And lastly, I want to point out one of the things that we always point out, which is very important, is the presence of infrastructure. We do believe that these features are going to be in the maybe 20 to 30 million barrel oil range as far as discoveries are concerned. So that would be particularly very important to have them being close to infrastructure. And if we go look to these blue areas, the brown and green, this is an area that is currently all held by a company called Griffith. And they are proposing for their infrastructure a very long pipeline system going over there from the east to the west. And our focus area are very close to that pipeline infrastructure. So again, this is very good news when it comes to potential future discoveries that we make. We'll give a sure claim to hopefully at that point in time existing infrastructure. So again, when it comes to the technical work program for these areas, we're looking at database generation. We currently have been given access to all the existing seismic data in the area. That's being worked. We're looking more at some regional studies that have been performed in the past, and we are augmenting to that. Again, I mentioned to you that we hope to fly in the near future our gravity magnetic surveys. Potentially then follow that up with seismic in the areas 1 and 2. Hopefully find some prospects and leads, and if necessary, potentially to keep delineating with additional seismic, or otherwise drill these wells. And as you can see, currently our schedule for the block sees us potentially drilling a well as early as Q4 2015. All that then leads to the following budget. And we see that we have a budget for 2013 for Chad, a total of $4.5 million, basically driven by the fact that the initial work program in Chad will be the flying of the magnetic survey. In this case, it's about $1 million worth of a survey. It's a smaller area than Kenya, that's why the numbers are smaller. So this is reflected in the overall cost for this particular work program. 2014, however, sees a significant increase of that program because this time we're starting to shoot some seismic. So as soon as we start shooting seismic, the overall cost will go up, so that leads us to a total number of 112.7. I think that wraps it up for chat. So I want to give it over to Sylvan.
Hi, thank you everyone, and we appreciate your support over the years. We're going to talk about the fundraising effort and our fundraising options. We're going to issue shares of common stock that will involve the right offerings, direct registered offerings, convertible loans and other instruments, and there are other available financing options to the company. However, our assumption, not having a partner through the 2 years of our exploration program, and this is a conservative assumption that we believe is in the best interest of the shareholders. We will therefore need to raise this $45 million over the 18 months for our exploration program in Kenya and Chad. The most visible option open to us at this time is equity finance. We plan to proceed by right offering to existing shareholders and also do a direct registered offering to new ones. Now, the right offerings. We shall be announcing the terms of the right offering shortly. Having gotten the approval, the right offering will give our existing shareholders the right to purchase shares in the proportion of their holdings. Now, the oversubscription privileges. We expect that oversubscription privileges will be provided as part of the offering to enable willingly shareholders take up any shares offered under the right offering that are unsubscribed at the end of exercise. Now, the dilution. And everybody wanted to know about how my holdings are going to be affected. The right of offering gives shareholders the opportunity to fully participate in the company's growth while avoiding dilutions. And of course, our expectations is that the existing shareholders will participate in this exercise fully. However, it is not mandatory that the shareholders, every shareholder, our expectation is that every shareholder will participate. We need to raise this money, and if everyone participates, the dilution effect is going to not affect the value of your holding. And if we all subscribe and participate, the value that's going to be created will ultimately offset the dilution effect. And I'm going to call on Peter to discuss that value proposition that's going to help to offset this dilution, if any. Peter.
Thank you very much, Sylvan and Gatian, before him. Now, talking about the value proposition for exploration and production companies, E&P, that value proposition is a very unique one, and it's often misunderstood or even not appreciated at all. There is an even more unique value proposition that can be excised from that, and that is for exploration companies. Exploration, because that's where ERHC is at, an exploration company. The value proposition for exploration companies is even more unique. It is high risk, but it can also be a very highly rewarding proposition. It is not necessarily predicated on cash flow, and might not even involve the discovery of oil and gas. Now, generally, the asset valuation and market valuation of an E&P company will continue to increase through the exploration, and if there's a discovery, development phases of the asset life cycle. Now, this is where ERHC is right now with the assets in Chad and Kenya. And indeed, the JDZ, it's here. The value concept for early stage exploration, which is captured in that red column, is where our assets are. It is, however, expected that market capitalization and asset value will increase as seismic and other geological and geophysical programs, and ultimately an exploratory drilling campaign occurs through this phase. Ultimately, the objective of the exploration phase is the drilling of successful wells. A significant commercial discovery usually brings a sharp upward movement at about this point. If we make a successful discovery, if we make a commercial discovery in large quantities, what you would usually see is these two values will shoot up like that. A lack of discoveries, however, as we have experienced in the JDZ, does the exact opposite. It brings a sharp downward movement here. This is the risk. That is the reward. And as shareholders have to understand what business we are in, what our value proposition is, and what we're investing in. If the exploration program is well managed, however, there are sufficient prospects here at this stage for such value appreciation as to give shareholders the opportunity to cash out even before drilling occurs. And indeed, well managed, there will be sufficient opportunity here for the company itself to cash out. That, again, as shareholders will remember, was the case with our partner ADAX, which was sold for a sizable premium on the eve of drilling, prior to drilling of its prime assets in the JDZ.